Good morning. Let us see Chapter 1 Introduction to Accounting. An accounting is an information system which is a system of collecting, storing, and processing financial and accounting data that are used by decision makers. An accounting information is generally a computerized method for tracking accounting activity. The results financial reports can be used internally by management or externally by other interested parties including investors, creditors, and tax authorities. Let us see. Accounting is an information system which receives the data, processes the same, and gives the output in the form of information which is useful for the decision making. So here the accounting is an information system which receives the data. That means all the informations are collected, whether the purchases or sales or whatever the transactions are collected, and it is processing the same and gives a desired result. The desired output means whether it's a profit or loss in the form of information which is useful for decision makers. So, decision making is a very important part in the management as well as in accounting. So, what type of decision can be based? Whether if it is a loss in an organization or if it is a profit in an organization, anything that is further steps can be processed. So, if it is a loss, what the business can be taken the further steps. So, this is what the decision makers has to be analyzed. There are different decisions which are made in an organization or a business. So, based on an accounting information only, we can do the decision making. So, that is what here it says. Accounting is an information system which receives the data, process the same, and gives the output in the form of information which is used for making the decisions. The history of accounting or accountancy can be traced to ancient civilizations. The modern profession of the chartered accountant originated in Scotland in the 19th century. The Italian, Luca Pacioli, recognized as the father of accounting and bookkeeping, was the first person to publish a work on double entry bookkeeping and introduced the field in the Italy. He is also a Italian mathematician. Accounting is recording, classifying, summarizing, analyzing, interpreting financial transactions and communicating the result to interested persons. Here, the recording pertains to writing down or keeping the records of business transactions. Transactions means it may be either the purchase or sale in terms of money. So, we call the accounting as an art. At the same time, it records pertains to writing down or keeping records of business transactions. Accounting is considered as an art because it requires the use of skills and creative judgment. One has to be trained in this discipline to be able to perform the accounting functions well. Accounting is also considered as a science because it is a body of knowledge. However, accounting is not an exact science since the rules and principles are keeps on changing. So, it also concerns with the transactions and events having the financial character. For example, hiring an additional employee is qualitative information with no financial character. Hence, it is recorded. However, it is recorded the payment of salaries or building or sale of goods, etc., are recorded because they involve financial value. So the financial transactions are recorded as well as the transactions having the financial character only. That means the sale of goods or purchase of buildings, the payment of salaries, etc. And the business transactions are expressed in terms of money. They are assigned amounts when processed in an accounting systems and it interprets the result. That means after analyzing, it is interpreting. Interpreting the result means information is useless if they cannot be interpreted and understood. The amounts, figures, and other data in the financial reports have meanings that are useful to the users. So all these the reports has to be corrected and send the results properly to the decision makers. That is what interpretation. So here the art of recording, classifying, summarizing, analyzing and interpreting the financial transactions. As I said, the financial transactions means it may be anything like salaries to the employees, or the payment, or the purchase of building, or sale of goods, etc. So these are the transactions events. Let us see this accounting in detail. Accounting is a systematic process of identifying, recording, classifying, summarizing, interpreting, and communicating financial information to users. Accounting shows the profit earned or loss incurred during the accounting period. It also displays the value and nature of assets, liabilities, and capital. So here it states that accounting is a systematic process of identifying and recording the transactions. You have to classify it and interpret it, as well as you have to communicate the financial information to users. Accounting is a language of a business. Identifying financial transactions, recording it, classifying the recording events, summarizing the information to find out profits or loss, interpreting the results, communicating it to the users. So here the identifying the financial transactions means whether it may be a purchase transaction or sales transactions. So this is what identifying, and you are going to record it. And after that you have to classify into different recorded events and then summarize the information, whether from the recorded transactions you are getting the profit or loss, and then interpret it. Interpret means findings. Interpreting your findings is about seeing whether what you have found, findings from your studies. So, this is what accounting transactions. Let us see the definition of accounting. According to American Institute of Certified Public Accountants, accounting is an art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events, which are in part at least of a financial character, and interpreting the results thereof. So, according to American Institute of Certified Public Accountants, it says that accounting is an art of recording the transactions. And after recording the transaction, you have to classify it and summarize it in a significant manner, like assets, liabilities, capital, in such a way, and then in terms of money, transactions, and events, which are at least in the financial character. And after that, you have to find out the results, whether it is a profit or loss. Here, the accounting can be defined as a process of identifying, measuring, recording, and communicating their required information relating to the economic events of an organization to the interested users of such information. Now, in any organization, there will be shareholders, creditors, investors, and so many people. So, those investors or creditors or the shareholders will be very much interested whether what is the financial position of the company. So, if it is a profit, it's a very good profit. The financial position is very good, means it's a very good company. Definitely the profit is more, means it is very good, it's a top companies. So for share market and all, they will analyze the different companies. So for that purpose, the result you are very much important for the users of such information. The information is very important for the decision making. As I said, if the business is gone down, they have to make on thinking to improve it. So for that purpose also, the financial information is very important. Each by step as well as month by month wise, they need to know what is the profit of the business, whether the products are sold, how much of products are sold, and how what is the current performer in the market, what are the current strategies in the market. All these are necessary for the accounting information. So let us see the characteristics of accounting. The first characteristics of accounting is identifying and recording the financial transactions. As I said, transaction means here the purchase or sale of goods or building or whatever it may be, the assets. So here, only those transactions and events are recorded. That means the first one, identifying and recording the financial transactions. Under that, only the transactions and events are recorded in accounting, which is of financial character. It must be only in financial character. There are so many transactions in business which are also very important to the business too, but which cannot be measured and expressed in terms of money, and therefore such transactions will not be recorded. So here only the transactions which are in terms of money alone we can say as a financial transactions, and some of the transactions which are expressed in money are therefore can be recorded, and if it is not expressed in terms of money then it will not be recorded. So here is a pro forma given, that is the transactions as well as the journal is given here. This is only an example to show you how the recording is done in the book. Now, cash and capital account is given. Here, a person has invested the capital for doing the business. So, for that purpose, cash account to capital account. This is what the transaction. So, how much the capital has been invested. For that purpose, it has been recorded. This is only an example. So, recording is done in the books called journal. The process of recording is called journalizing. So, all the recordings will be done in a book called journal. The process of recording is called journalizing. Now, here the process is done. You can see in red letter all the returns, cash account to capital account. So, this is what journalizing. So, here the example for recording the transaction means entering the transactions, whether the amount is payable to anybody, on which date it has been paid, which date it has been purchased. These are the recording of or entering the transactions. Here, the goods sold for business, or the goods are sold for someone, or you have purchased a building. These are also included as the recording the transactions. So, the second characteristics of accounting is classifying. So, how you are going to classify? After recording the transaction in subsidiary books or journal paper, that is, here the transactions are being to be classified. Classification is a systematic analysis of recorded data with a view to bringing together in terms of a similar nature all in one place. Account is called with the transactions of similar nature and recorded. That means in the previous you have seen that the transactions are recorded. After recorded, all the recording transactions have to be bring it in one place, which is called the ledger. That is all the transactions. It may be a purchase, or it may be a sale, or it may be a check given to someone, or it may be the cash purchase, that is purchase goods for so cash, or whatever it may be. Any examples will be there here. So these are the everything has to be bought it in one place, which is called as a ledger. That is what classification. If you have bought a furniture, or if you have bought a machinery, for anything, all the transactions, whatever we are doing it in the business, that must be classified and brought it in a book called ledger. This is what classify. So ledger is a place where various types of accounts are maintained here. So here you can see the different types of classification. The accounts are classified into the expenses account, assets account, liabilities account, and sales or revenue. This is only an example how the assets have been differently classified, how the accounts are classified. So, how the accounts are distributed into different accounts. The next characteristic of accounting is summarizing. This involves presenting the classified data in a manner which is understandable and useful for internal as well as external users of accounting system. Summarizing leads to the uses of accounting system. So here, how you are going to summarize it? Summarizing leads to the preparation of the following statements. You have to prepare the trial balance, trading and profit and loss account, and balance sheet. These all will be seeing it in detail in the future. So, this is only an example to know what you mean by summarizing. So it involves presenting the classified data in a manner which is understandable, as well as it is useful for the internal as well as the external uses for accounting system. You are summarizing it in a different way, different balance, trial balance and trading account, profit and loss account and balance sheet, like that. You are going to summarize it and you are going to do it. This is what summarizing. Here it shows that he has brought it into a general ledger, and here he is going to summarize it. How you are going to summarize it in a different way. That is, all the ledgers you have found out the accounts, and in from the ledgers we are going to do it, whether it's a profit and loss account or the balance sheet or the different accounts. The next characteristics of accounting is analysis and interpretation. Analysis and interpretation means it is a findings. Analysis and interpretation of financial data are carried out so that the users of financial data can be make a meaningful judgment of the profitability and financial position of the business. This helps in planning for the future in a better way. So here, analysis means it makes a recorded facts in the financial statements simplified by proper classification. Interpretation means explaining the meaning and significance of data. So you are going to analyze that and you're going to find out here whether the business is in loss or profit. So what is the findings of the analysis? What is the findings? That is what interpretation. Interpretation means at the end you're going to explain if it is a loss, why it is a loss. Analysis means it is a findings of the business. After finding out from the given information, you're going to find out whether it is a profit or loss. After finding it, you're going to come out with some findings. That is what analysis and interpretation. And then the next characteristics of accounting is communicating. Accounting involves communicating financial data to its users. Users includes owners, managers, employees, investors, creditors, etc. The accounting information must be provided in time and presented to the users so that appropriation decision may be taken at the right time. So, this is what is very important here. The accounting involves communicating financial data to the users. So, you have to communicate. That means you have to pass on the information to the users who are the owners, the managers, the employees, the investors. The investors means it may be the shareholders who had invested the money to the business, and the creditors, etc. So, these people need the information about the entire financial position of the business. For that purpose, you have to communicate to them, you have to pass the information to these people. So, the accounting information must be provided in time and presented to the users so that the people will take a proper decision whether the business is in the loss or business is in the profit. So the owner also, it will be very much useful for him to take a right decision at the right time. Now here it is an example for financial transactions or economic events. And here another example for non-financial transactions or non-economic events. Now let us see the example for financial transactions or economic events. So what are the financial transactions? Commence business with cash. That means you have started the business with cash. And goods purchased on credit. The goods purchased on credit. The credit means you are going to pay the amount later. You're going to purchase a goods or product at the same present and you're going to pay the money later. That is what credit. Then salary paid. Salary paid to the employees. And withdraw cash for personal use. You are going to withdraw the money from the bank for the personal use. So these are the transactions which are related to money. So you're calling it as financial transactions, or you can call it as economic events. And here is an example for non financial transactions or non economic events. They are quarrel between the purchase manager and production manager, resignation of an able and experienced manager, starting of a new business by the company as well as the competitors, strike by employees. So these are the example of non-financial transactions. Here the money is not at all related. Only the quarrel between the purchase manager and production manager. So you call it as a non-economic event or non-financial transactions. As experienced manager is resigning. So here it is not money is not related. So it is a non-financial transactions, as well as starting a new business by the competitors. Only the competitors are going to start. So here also you're just planning to start. So it is not a money related, as well as it is a non-economic events. Strike by employees, it is a non-economic event. Let us see why you need for accounting. Why the accounting is needed, students. At the end of an accounting year, every businessman want to know how much they have gained or lost during the year. Further, the owner want to know the financial position of the business. Either it may be a profit or it may be a loss. They are interested to know how much amount they are liable to pay to whom they owe it. That means they would have borrowed so many people from the creditors. That means many people are there who have given them the money for the owners. So they will be knowing by seeing the financial position how much of money they have to be paid to their borrowers, how much of amount is owed to them and by whom, etc. In order to ascertain such information, it is essential to keep a complete and systematic record of each and every business transactions occurred during the year. So for this purpose only, it is very much essential to keep the complete transactions during the year, to keep a systematic record of business transactions. So always we have to keep every day up to date the recording the transactions with a date, which date the cash has been sent outside. That means which date we have given the check to the borrowers, or which date the people have come and purchased from our business. That is, the customers have come and purchased our product. All these dates must be recorded as a business transactions to get an information about the operating results, that is profit or loss. So why accounting is needed? To know whether our business is profit or loss, to display the financial position of the business, because now you can see which company is very top blue chip companies in India, top 10 companies in India. They might say Reliance, or whenever you say IT companies like Infosys as well as IBM, these are the top companies. It may be a multinational companies also, or it may be a Indian companies also. How will you say how that is it is a top position? By seeing the financial position, the profit will be more, shareholders will be more, shares will be more. So by seeing that only you can say that the financial position of the business. So that financial position of all the companies, the top companies, must be displayed. Everybody must know the financial position of the business. It is essential to take correct and accurate decisions. So, accounting is needed to take the decisions properly. And next, it provides the necessary information to prepare budgets. Based on the accounting only, we have to prepare the budgets. Budget in the sense, for the next month of December, how many cars are going to be sold. Like that, we have to prepare the budgets. For that also, accounting is needed. And it is necessary to calculate the tax liability. Yeah, definitely the tax liability is very important. Tax means how much of tax it is going to be paid. So that is why the accounting is very much essential and very much important. So we can see the next class in detail.